Okay, Monday, December 12th, 2016. Okay, today, Monday, starting off, we had the reaction of OPEC with oil. Okay, now I want you to remember how you felt this morning. Okay, the market moves on emotion, right? The fear and greed. A lot of you felt that oil was off to the races. I had mentioned late Friday on Stock Twits that I thought oil was pausing below previous resistance, and it was going to swing 54, 55 area, but closer to 54 was the first hurdle off to 62. Basically, we opened at the highs, okay, and sold off all day long, all right? So to me, there's a whole bunch of people that got stuck in oil and oil-related issues, and we know as humans, we're now playing the hope game, okay? So for some of you, a couple hours into it, when you feel that something's not right or it's not going that way, your way, get out of it or reverse it. I know it's difficult, okay? Remember, I have outside eyes, but it's kind of like putting on a trade. If I put on a trade and it takes forever and you're itching to get in, you know, getting in isn't a problem, it's getting out, right? So you wake up in the morning and you're panicked, you have to get in. Back in the early 80s, there was a story in the newspaper where there were people running through the streets that they needed to buy gold. Okay, so basic hysteria. All right, so a lot of us do that. You know, you wake up, you see something, and you go after it. Some things you have to for whatever reason. For me, I'm more of a contrarian. I wait for days like today, okay, for the oil thing. Yes, I got the pause on oil, and yes, it did swing up to 54, but the amount of selling that came in afterwards, and I just didn't like it. Right now with futures, oil contracts go way past the 2020. I mean, if they could get these contracts off, they could. If they have what they want hedged, they can pump all they want, right? I mean, if you're good to go out into the 2030s, I haven't looked yet on open interest on and volume today in those long distance contracts. But if you can get those hedges off, you can pump all you want, right? Okay. And there may be an agreement, but there's always somebody that's going to pump, and that's just OPEC. America receives 40% of its oil from Canada. Okay, so it really doesn't affect as much as say Europe. Okay, but it's money. You know how? I mean, even just the hint that somebody is cheating. You know, and you can see it in ships and all that other stuff. But what I'm getting at is that feeling you had with oil that this is going to be a sure thing. This is, you know, not a problem, no fear in the world. But yet the stock market does the exact same thing, right? Takes off running and moves too far too fast. That's just not right. Blah, 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 blah. You can take two different markets. They have the exact same thing. And yet one you can't wait to short into the ground, and the other you think this thing is taking off. Okay, so for me, early on, the trading, you know, if you do 60, 80 trades a day, you begin to realize you put in a trade, you can't get it off. It turns out to be a good trade. You put on a trade and they suck it up right away. You're usually wrong. Okay, the deal is if you know how many, you know, you can look at a monthly chart and go, okay, I'll buy it down here and I'll sell it up here. Okay, and then you sit down and you trade off of a tick chart. or you trade off of something, you know, at least do a daily, right? How often do they swipe the previous day's low? That kind of thing. But the deal here is I just wanted to point out how you can look at one thing and it's, you know, oil's on its way to 62 or 70 or 90, whatever. And then you look at the stock market and you can't, you know, oh, it's not going to double. So it's just one of those that the first time that you're watching, you know, it's the whole mind and body, two different deals. And you get that, you know, that kind of like that gut reaction. I use my gut a lot, like when I go through charts. You know, it twitches. It's like, okay, I need to do this. Okay, like, you know, I've looked at millions of charts over X amount of years, and I don't know what day it did happen, but all of a sudden it's just begin to start talking to the pages. Oh, this is going to go up. This is going to go down. This is losing momentum, and all these things. It's you know, if your little line is pointing up, then you want to buy the dips. If it's pointing down, I know how difficult it is. You know, it's kind of goes back to when I was 15. I was watching the baseball all-star game, and I'm sitting there going, why do they need managers? These guys are born, you know, professional, elite. I mean, why do they need a manager? I mean, it comes natural to them. And then the 13th inning rolls around, and I'm like, okay, that's why you need a manager. So sometimes you need a cheerleader or outside eyes and that kind of thing. And that's kind of where I come in. I basically, when I was on the floor, I was a teenager on the floor. And this is the olden days where, you know, the only computers were running at 33 megahertz. We would hit the upper end of a range and the phones would start ringing. And then we'd roll over and hit the lower end of the range and the phones would ring. And that's the people getting in or getting out and vice versa. The toughest thing, and it's, you know, the humans who are social creatures, we like to interact with people. You know, if I stand on my box and say, look, you know, this, of course, there are very few of me that say that. But over my time period, that's where I end up. So it's one of those where you as a speculator also have to handicap the handicapped, as I say. You know, you have to kind of go through. And you know, here's where we're at, you know, in the stock market. You know, here's where we're at the real estate cycle. Here's where we're at on the macro level. Some people only want to, you know, what's going to happen tomorrow? Hey, how about this? Go to Vegas. You know, it's the same type of deal. You know, red or black. You know, think of that little bit of odds that's because of the green. There's a single zero at the Monte Carlo. Think of that as your commission, and then just go from there. The nice thing is remember, some of these that, you know, once you get a trend, okay, draw a little line on there on a daily or on a weekly. Stocks are a little more difficult than, say, commodities, okay? But and kind of hang on, okay? It's like when you look at charts, it doesn't say the guy on CNBC said this, or the guy on Bloomberg said this, and you know, it's you know, up, down, or sideways, and things spend the majority of the time sideways. Okay, so now we're coming into a time period here where we have FOMC. All right, so what I have here is I've listed. The name contains Treasury, so this will be like TBT and TLT and things of that nature, and it's an equity. Most of you guys are equity people. I put it in for 3 months. Okay, so some of these have already moved 60% in 3 months, and on the downside here, this is on the bull. Okay, and this one's dropped by a third. But what I'm getting at here is that we've already moved, okay? So you've heard of terms like buy the rumor, sell the news type of thing, okay? So we've already moved on here, and we're going to get the news, okay? Down here on this one for November, okay, bonds took off, banking. This is basically forward looking to what the administration is going to do. Basically, supply side, a whole bunch of spending money, okay, and we're gonna pump it into the economy, and that's the forward looking here. That's I mentioned it. We're in the upswing in real estate, but we have to, you know, move the production, you know, move the stuff that's already sitting there. The house that's sitting next to me, they stop by all the time and they're looking at their feet. So it's one of these things that now we're going to get the interest rate hike thing tomorrow, or on what do we got, Wednesday. Okay, today's Monday. What I'm getting at here is that now that we've moved, okay, and we're going to get the news, the market, you can see the volume here, is susceptible for a pullback, okay. And so for some of you that haven't gotten into some of these things, you know, this is just a start, right? In 2004, we raised interest rates, started raising interest rates, and it was 14 times over 17 months. And we've only done it once. And we're coming, you know, way off the bottom here. So you haven't missed anything, you know, like with bonds. Bonds are at what, 148.5. Par is 100. So you still have a lot of room to run, and you know, it's just getting started. So the thing here is I'm looking at it as, well, okay, you get your news, the new people that are getting on board, they you know, it's the cause and effect type of thing, or, you know, say, you know, the causation. It's already priced in, right? Okay. If there's a surprise, it would be a greater hike, okay? That would cause a few issues. You want to make it that the people are like, you know, I better get off, and, you know, if I'm going to get this, you know, home or new home, or I better do it now. What I'm looking for here is that we actually set a high in rates for now, and then we trend lower for the next 2 quarters into the summer. So we have banks who are now going to have to compete with each other to draw people in. So we draw mortgages back under 4%. The older ones, you remember when your mortgages were a lot higher. You know, for some of us, it's like, you know, 5%, you know, hey, that's a steal, you know, that kind of thing. So, you know, there's new people coming out with mortgages. We basically all have a payment, okay? So what I'm looking for is that we get some sort of high on some of these products like TBT, and then we actually slice underneath here. This one's taper, okay? Like I said, I just did these by percentages for the last 3 months. You can see here how the price of this, okay, it came down over the summer period. So I'm basically looking for the same type of deal, because what we need to do is raise rates, get the commotion, and then have the people on TV say, hey, it's come down, you know, market rates have come down a quarter. We know we're, you know, 397 or some deal like that, before we start moving them a lot higher over time. Back to normal, okay? I remember at one time we had the bond futures were pegged at 8%, okay? That was what was par, okay? Then they changed it because rates had come down so far that they dropped the coupon down to 6%, and that was more like normal. So that's basically what we're aiming for. We're so far one way, we know in markets that we usually swing the other way, okay? On here also, you have like the ADX. These are dailies. They're the broker dealers, they're not very nice to the little guy. Very, very few products that actually you benefit. I mean, when you're running negative interest rates, and the broker dealers are going to come out with a product, interest rates can only go up, really. You know, yeah, they can continue to go negative, but then we'll definitely be in some dire straits. There's not much to offer. Eventually, you know, kind of like UWTI came off the board and DWTI came off the board, and it was changed into something else. Impeccable timing, right, by the bankers, you know. The same type, they're not offering anything. The only way to really get into it is buy the futures, and you know, not a lot of people do play the bonds, they play the notes. Debt is the fattest thing out there on the planet. There's lots and lots and lots of debt because it takes forever to actually save money. so it's capitalism. It's, you know, it's forward looking. It's, you know, that kind of thing. But what I'm basically getting at is the dollar's moved, gold's dropped, bonds or debt's dropped, and all this, and we're coming into this, and it's like the jack in the box or the piñata. There's no I don't think there's a prize on the inside. You're not going to get that follow through, because what you want to do is you actually want to scar the memory of people that they don't do that again. Kind of like OPEC, right? This isn't the first time OPEC's played games and it didn't hold. Okay, their timing was quite impeccable, and the movement for oil going from what, 42 to 54 in a couple of weeks. Why isn't gold moving, right? You know, isn't that inflationary? You know, that kind of thing. So, you know, that of course is a two-lay parlay kind of thing. You know, oil's up and gold's down. What's the market's each its own kind of thing. So so that's how I'm leaning. Okay, I have been trying to look for a bounce on some of these things before for the last couple of weeks, just basically walking into it. You know, the red line here is the unbalanced volume. Okay, so you see the pickup. All right, once it got going, all this volume, we know, just like with the Japanese yen, they're all in here, right? They're all in here. Okay, so here you have something where this is TMV, 20-year, okay, 1.3 million. It does have options, okay? So some of you, if this, you know, I'm going to guess that this thing's going to lose 10%. But as a floor trader guy, I'm right. I know where the, you know, where's my pain here kind of thing. I'd aim for down here on, this is actually pivot, and this is R1 on here, and this is S1 and S2. Because of the big movement, it's wider, okay? But that's how I look at it, is all of a sudden, you know, oh, we're going to raise rates. Well, you know, now they come running in here. It was kind of like I talked about the Japanese yen. You know where they're at, okay? And the same thing, you know, how I started off with the giddiness. You know, they're giddy on oil, but they be damned about the stock market, okay? So how I'm looking at this is all of a sudden, you know, they buy the breakout, it reverses on them. And tomorrow, if we're down here, now they're hoping, oh, they're going to raise rates, and then all of a sudden, now you're all of a sudden you'll start hitting stops at 23.45, and it'll come down here. When I mentioned options, since I knew we were going to enter a cycle of higher rates, okay, what you can do. All right, and you have to understand options on this here too. And the other one too is you're going to have to put up some extra capital on this. But what you do is, it's like catching a falling knife, right? Okay. So as the price comes down, the puts actually begin to increase. Well, if I'm going to want to buy these things, okay, buy this one in particular, I'd want to short some puts. Say, like, for example, like here. Oh, I'd be willing to buy at 18. Okay, so if this comes down, I'm not saying it will, but if it comes down, you can say, hey, I'll sell naked an 18 put. All right, someone will pay me, and I'm willing to buy it at 18. Well, of course, if it goes to 16 and you don't get the $2, okay, for the premium, you're going to start with the money situation. You know, you're running a negative there, okay? That's a strategy, okay? You want to, you know, it's kind of like this. Well, I'm interested in buying the falling knife. Well, if you write the put, somebody is going to pay you to buy at 18. Okay, instead of, well, I'll buy it here and whoops, I'm behind it, and whoops, I'm behind it kind of thing. You could also have a situation here. The couple of moving averages kind of come around in this area around the 20 area. Okay, I would be interested in 18, but around the 20 area, which is around 19 in here, you'd work on something like, say, an inverted head and shoulders here. Okay, and this one's on a weekly, and then we looked at a daily, but I want to put on like a 2-hour, so you can see how we ran up here, and then we're doing this little stair step thing. Okay, popped up, and now we're coming back in. So we know on some of these that, if you're working on a sideways area here, okay, it pokes its head through, it jabs. Well, you can have a tendency where it just collapses and falls apart. You're definitely going to find buyers down here. This isn't just we raise it once and then forget about it. This is a process here, because as we raise rates, banks are more inclined to lend, and it feeds on itself. And there's more money, and they have to pull it out of this. It's like giving everybody credit at the casino, and then everybody's spent. No more credit, no more this, and then it inevitably it just implodes. And that's where your Warren Buffetts and that they come in. That's when they like to come in. They like when that happens. They can, it's unfortunate, but then they scoop up assets at pennies on the dollar kind of thing. And, that's the game that's played. It's played all the time. It's like the stock market, you wish you had what you had in at the top at the bottom. But we still have some time here before we kind of run into a recession again, or we have a maximum macroeconomic cycle of real estate peaking too. This country is basically, it all runs on real estate, unfortunately. I think a quarter of the population, it's a fat number. 25% of GDP are autos, okay, for cars. So, housing is a big thing. All your hinges and paint and doors and trees and lumber and wiring and the best part is sometimes you read about stories where $1,000 down or no money down and you get a brand new home, So, for you guys that are having bonds, okay, on the bond side of thing, futures, what I would say is buy on the evens, 148, 146 kind of thing, and then sell on the odds, 151, 153, 155. What? This is the thing here, though, okay, it's kind of like driving a car. It's not me I worry about, it's everybody else. 5 years ago, gold was at $2,000 an ounce. Now it's a little more than half that. Okay, so it's the pricing. If we know interest rates are going higher. Hey, it's a freebie. It's a lock. They're going to raise rates. This stuff's going to fall. Well, it's already been falling. Like here. It breaks in July. Okay, it's at goes. This is the last swing into ZERP. Japan Japan, I think Germany, they went negative and it didn't stay very long. Okay. And we fell precipitously, and now we're kind of chopping. Okay. And we get down here, all of a sudden, it wouldn't take much to run this from here to here. I'm not saying that that's the angle you want to play. Do I want to run in but it's one of those where you can come in on the option side. And that's how I look at it too. Who's going to buy call options on bonds when they're going to raise rates, kind of thing. That's where they're going to throw them at you at a deep discount, and because everybody else is buying puts per se. Now, I'm not saying that this stuff is going to happen. Anything can happen, right? So, but what I'm saying is that the market is susceptible, that all this volume that's in here just kind of got in here over the last month. You know, and you have this, what happens if you move up to close to 18, and all of a sudden you're at 18 and a half, you start talking 2-week highs. You know, and all of a sudden everybody that got in on these big volume days, they're now in trouble. And they go, well, maybe I'll short some more here and I'll short some more here. And then before you know it, you've gone from 17 to 20 and you got to get out. All right. And you can see the unbalanced volume is down here too. But like all I'm saying is that, you know, just be very careful. Now, the other thing too is this is the bond market. Okay. So I pointed out things that have moved in the last 3 months up and the last 3 months down. It's the same thing too. Trends change. Back in the 90s, some backhoe guy at, I think it was the Merck. Bashed a hole into the building and went into the river, right? Yeah, okay. Flooded it, computers, blah, blah, blah. What happened was because of that messed with the rhythm of the market, because I believe the market is a living creature, right? We've given life to corporations. If they all meet at the exchange, it's a frat party, you know, that kind of deal. And it changed directions, just like the market changed directions after the tsunami in Japan, because there's a natural rhythm to all of this. Everything, you know, everything kind of flows. It's a nice, neat little machine. You know, the only time when things get crazy, that's when, that's when the most pain is going to surface, right? When the people lose their sanity. What's the name of that book from the 1800s? The Delusion and Madness of Crowds. Okay, it's Beanie Babies, real estate, season tickets for sporting events. You know, how come you didn't buy it when they were called the Aints in New Orleans? You waited until they won the Super Bowl. I mean, things like that. You know, that's the contrarianism in me. You know, if, you know, nobody wants silver at $5, I'll take it. Everybody wants it at 50. Here, you can have mine. You know, that kind of thing. It's not that every day I look at the market and I go, well, it's up today, so I'm going to sell it. You know, that kind of thing. I'll just run through these quick here too, because here's a whopping 700. But like I said, they don't offer you very many products. The other thing too is not a lot of people actually follow the bond market. That was the same thing I ran into when I was 9 years old and read the Wall Street Journal. Who'd want to wait a whole year to earn 6%? You know, so you didn't watch it, right? And then all of a sudden you start getting, you know, you run down to your bank and you're 15 with paper route money, and they go, hey, you got $100? Yeah, no, we'll give you a toaster and 16% and compounded daily. Ooh wee, you know. Luckily for me, Social Security started then, so yeehaw. But Social Security is a backstop, as they say. All right. The other thing too is here this is the 10-year here. So this is somewhat medium range here. Okay. TYO, wow, 85 whopping 100, but you have a double top here. But you know, if you look at it this way, say you get it at, you know, we'll stretch it here and see that we take it. What's this down here? 14 and a half. You know, 15. That's only $1. That's not worth it. Oh yeah, that's the front end. That's right. Those are the ones we're actually moving. That's a 3-timer. The few of them that they had out there, they actually got rid of right when things were changing. Thank you, Deutsche Bank. There's nothing like having your stuff redeemed. It's like, ooh, they're turning. You know, because you can't go running into futures and start doubling it up. It near the ends of moves or at beginnings of moves, it's the most, you know, the swing here. What do we have? In a 2-month period to make the bottom or the top and the bottom in interest rates. So you go from 16 to 10 in 2 months. Okay. It gets a little painful. So it's one of those where you every week you just at the lowest low of the week you put in your buy order, you buy a chunk, you know, and You buy a chunk, you buy a chunk, you buy a chunk, you put it down here, and it's already gone the other way. So now you're playing the buy the breakout, move up your stop, buy the breakout, move up your stop kind of thing. Okay, now we're up to here. So you're, you know, the mechanical side of things here, you know, the stops are going to be down in here. The other thing too is that, you know, the markets will be open. For those of you that tried to play gold for Italy, you're up 1 minute and the morning comes around and it doesn't work out. And that's very painful. You know, you work so hard to come up with an idea and a plan. You implement it, it's going to work, and it doesn't. So DTS, yeah, DTUS, this is the 2 year. So this was the closest one I could find on here, that because we're raising the front end is what it is. I believe I did a video on the yield curve, and rates are low on the front end, say 2% and 6% on the back end. So they get the money from the Fed, they at 2% kind of thing, and then they turn around and write paper at 6%. And then what happens is eventually people need money, you know, because there's commercial paper and stuff over it, and they bid it up, you know, like, you know, if you're making 16% in the stock market, or say 30% in the stock market, you don't have a problem going and picking up paper at 6 and 7% overnight, right? Because you're making twice that, you know. But what happens is that the front end is 7% and the back end is 6%. Well, you're going to lose money, you know, and that's how the economy just kind of slows down. It's kind of like we're going to make a new we're going to build 600 homes here, and all of a sudden you sell 30, that kind of thing. And all of a sudden you're in trouble. But, you know, they didn't offer much. And of course, on top of it, there's no dividend, you know, so it's basically cap gains, but they really didn't offer anything. I basically just wanted to kind of point out that, you know, these things have already moved. You know, we've moved from what, 10 to 20. This one doubled, 23,000. Okay. No, you know, nobody's interested. They will become interested though, you know, down the road, when all of a sudden we're at the end of the raising, you know, rates, and then they come jumping into these products and we turn it on them, something fierce, you know. But what will happen though, I think, is that this is a good reversal here. Pokes through, you know, once, twice, thrice, pokes, opens here, trades through and closes lower. There's a little momentum thing there, all for the whopping 24,000 shares. All right, so like I said, these things are susceptible to some pullback. Just because the Fed raises rates doesn't mean your little thing's going to take off, you know. And it's think of it as like a horse race. This is your favorite, right? Okay. And everybody wants it. Well, the odds begin to drop. So you're risking more, you know. You're risking $2 to win 20 cents. Yes, Kev, it's 10% in 2 minutes. But, you know, grasp the part that you're putting down $2 to win 20 cents, you know. I always go back to the Super Bowl some years back, where it was the Giants and the Patriots, and I'm in lawful, and I'm not a gambler, right? You know, whatever, you know. I'll hand some money to people and have them go into high stakes. They'll shove a $20 bill in a nickel machine, but they'll be damned to throw a $20 bill in a $5 or a $10 machine, right? It's $20, you know. Hey, if you get a cherry on a $20 machine, lobster. You know, I mean, you know, you get a cherry on a nickel, it's like dirty fingers, you know. Those days are long gone. But you understand, it's the same type of deal, right? So I'm standing there and I look up at the screen, you know, as the Patriots were at 16-0 kind of deal, and they're playing the Giants. I look up at the money line, and they were offering 8-1 if I took the Giants. And I'm thinking to myself, 8-1, which of course on the flip side of things, I think it was what, 1-9. You had to lay $900 to win 100 kind of deal. And then don't forget your VIG. Bastards. So yeah, there's 10% on every bet, you know, that kind of thing. So I'm thinking, hold on, is this a football game, right? It's straight up. So you're offering me 8-1 on a coin flip if I take the Giants? Well, you know, that's what gambling all about. So what do you take? You take the Giants. That's the contrarian thing. It didn't make sense. If I would allow, you know, whatever, you know, it's a bet. It's, you know, you stuck it in the machine, you pulled the handle, ding, 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 nothing. Well, that's how I have to look at it. You know, same type of deal. It's that getting out, right? That's what I really hate about those little teasers you get right away, like after the first pull or two, and all of a sudden you're like, you know it. This is, you know, you drove an hour, you get there, whatever, you pull the handle, and it's like, you know, it's, you know that there's not another, you know, diamond behind it. I worked on my way up the ladder, I worked at a casino, and I opened it up, and they had the schematics in there for red, white, and blue sevens, and the jackpot. These were progressive quarters, the red, white, blue sevens. The progressives, to the $2,500 it started off at, was on 10 million pulls. Was it, if you put in 3/4 and you win 3/4, that's counted. Even though you got your money back, you are a winner to them. You're flat to yourself, but to the little computer. But it was the jackpot of $2,500 and a 75-cent machine was on out of 10 million pulls. This one got a little bit too far for you folks from London here. This one got a little bit too far here. This one actually gapped on here. So London, 52. So what do we have here? These are dollars or pence, whatever. But you can, it gapped, went the other way. So, you know, the momentum is kind of changing on here. So I guess to wrap up my whole little, did I even get to the main ones? Let's run through them. Here we go. See, Kev, you would have quit right before you got to the highest volume one. TLT. So let's take a look at TLT. All right. This is my claim to fame on this one here. I joined a little contest deal here, and I threw this one at it to short it here. So this is I'm in 7th place for Fun and Games, you know, but this was the one I shorted here. All right, so on balance volume all the way down here, everybody's convinced the Fed's going to okay, right? 90%, yeah, whatever, 70 to 90. It's a given. So what aren't they expecting it? Expecting it to go this way. Kev, it sounds like you were 19 one time and went after this sure thing. You betcha. Well, it's kind of like back to the whole horse race thing. You know, the horse is 18-1. You don't bet the farm. If it's the 1-9, 1-6, 1-9, if it's the one bridge jumper, you know, for you pony players out there, bridge jump. I sit there all day long. No, I don't do much of that anymore. I go. There was a pub up the hill. It had an open mic night and stuff, so I'd go and do my shtick and whatever. But there'd be pony people back there, and I'm like, okay, ponies, you know. It's whatever, you know. And what I'll do is I'll play, you know, trifectas kind of thing. You know, there's 5 horses, and you need to pick 3 of them. Okay, I mean, you know, what are my odds? You know, but the guys would be there with these $5 programs that are 2 inches thick, and they'd, you know, be chomping on the cigar, and you know, 40 guys, right? Santa Anita or whatever, and there's 5 horses in the first race. You go, okay, well, 40 guys, 5 horses, 8 of them should win, right? Even if they go after the favorite, there should be more. 3 would go up to cash in. I'm thinking, hold on a second. How can this be? You know, and then of course you take a look at how they're dressed. bad, Kevin. Shame on you. No. I didn't. I'm not calling my fellow citizens here. No. Oh yes, I am. But you know what it's. But it would be like, it'd be a lot. Hey, look, let me slap a number on you when you come through the door. Bob, you're 1. Gus, you're 2. Jim, you're 3. That's all you're doing all day long. You'd probably be better off, right? The whole Monty Hall thing. But same thing, TLT or what. I'm not saying that this thing is going to reverse and it's like, hey, Kev, do you think it's going to go to 120, 121, 122, 123? Or so I can get out of my oopsie-daisy back here. The deal here is if you're like, hey, I forgot to get up here and short the sideways deal, maybe I get a longer side, and get an opportunity to short it. This is what you're looking for. You're looking for the opportunity to short, not go against it. If I'd be going against the kind of thing, that would be the whole options deal, which is kind of nice because it's Wednesday. I guess I haven't looked at the options part of it too. On the bond thing that I posted last night at 148, the volatility was 14%. I think it was 3 points. So what is that, 151? So the option players, when bonds clear 151, and I'll just say go to 153, 155, I think 153.5 is a happy place. They begin to lose money. Okay, option sellers, okay. Somebody sells some calls, okay. Say somebody buys 25,000 SPX calls, okay, at the bottom. I'll just use October 2011, and the S&P is at 1066, and some unnamed octopus company purchases 25,000 SPX calls. The market maker sells it to them. Okay. They start bidding up the market. Well, unfortunately, the market maker is going to have to start buying the futures to offset the calls, right? And that's the easiest way to do them, okay? If you buy, I can't remember offhand what it was, but it was one of my better calls here. It was I think it was around 1066. And this was October 6th or 8th, and the S&P was at 1066, and I said it would be at 1294 by Halloween. And very few of you remember that one. But yes, it did. It went from 1066, it actually went to 13, but 1294 by Halloween. That was 3 weeks. That was a fun one. Getting back to here. All right, same type of deal here too. What's this 3 to 7 on the Barclay thing? Same type of setup. You have kind of like a hammer here, and a lot of volume moves up. This is kind of like, we'll just say an inverted head and shoulders type deal here. We're talking only dimes here, folks, and it's on the front end. They're not going to move much because we're coming off so low, but in the big picture down the road, it will have shown that it's moved, quote unquote, substantially. But like I said, in the quarters and stuff, we're coming off of very low rates. We've been low rates for a while. What are we talking here? We cracked it. We cracked the usual bottom on 9/11. That's when we went kind of into an extreme. All of these here, what do we have? These are nickels. Yeah, but basically, like I just wanted to tell you here, be very careful here. 1 to 3 year international. All right, this one's got, well, for some of you out, oh yeah, there you go, Kev. 728. Poor things. See, they don't, and then of course, if you don't offer anything to them like a yield, that's why folks will probably end up going after utilities here. That's usually how it goes. It's comparative to products. What do we have? Zero coupon. All right, pretty cool ticker symbol there, but I don't know if I'd ever get to the end of the newspaper. Don't lie to him, Kev. You know, I think there's 2 inches worth of quotes in the local newspaper. All right, here we go. TBF type of thing. 800,000. That one's moving by dimes too. What do we got? 20 years. What am I missing here? Well, I suppose, right? It is. It's moved from 20 to 20. That is 20%. Yeah, but who wants 20% over? All right. So, okay, you can put in your Fibonacci's and stuff. And there is a gap here. Yeah, we're back down to this options. Yeah, volume's okay. That's the bear. That's a pro shares though. We're back to the TMV. It's the one I guess you're gonna have to go after. What is this here? Dimes. Man, see, you know, oh, here's dollars. Ultra, 7,200. See, I can't win it all. I can't. You get, you know, you tell them, look, we're at 0 interest rates. We've never done this before. Britain hasn't had interest rates this low in 400 years. Why did we pick 400 years? Because that's as long as the Bank of England's been around. So you're telling me that my odds of winning are like caveman days? Yeah, that's what we're talking, folks. So 100 to 6, basically, you know, you can't win. 7,200. They're not interested at all. They will be interested at the top here when we finally down the road. Like I said in the other video, it takes about 36 months, approximately, plus or minus a couple, to jam the economy into a recession. So we cool the heels of the employees and the people who have the velocity rate of money too high. People, when they feel rich, and we've all had this before, where we count our chickens before they hatch. You might have the winning trade on and go spend it on Friday night and live it up. And come Monday morning, it is a nightmare. And we've all done that. What do we have? Dimes. Just cannot win. I will do a futures one here. I will put this video at the bottom of the list. But unfortunately, you won't know that I overdid it unless I say something. TLO, long term. Here's quarter. So what are we talking here? $2-3. I'm assuming we're gonna, a lot of these patterns here. I'm assuming we're gonna swing, you know, maybe 1 month high in these things. That's what I'm assuming. It's going after. I'm going after the price. I'm going after the market participants. That one's dollars. That has some volume. Yeah, so like here you get 109 and aim for 118. That's not too bad. You know, there's a gap up here too, but now you're not, well, you know, like I said, you're moving, you know, it will more than likely it would be like one of these where it comes up and then comes down, because once you clean these out, it's going to take a few paychecks before they get money again, before they can whack it. That's how that goes. Yeah, so that's that. Yeah, these were all. See? All right. There you have it. Take care.